So basically, when I look at earning itself, I feel three segments within the internet sector are very encouraging. First, you haven't mentioned that was travel. That remains to be the bright spot of China internet. We're seeing demand, exceeding supply for outbound travel. Now, outbound capacity right now is at 70% of 2019 levels, and we expect that to get to more than 80%. We're seeing government trying to unlock supply constraint for flights and also visa restriction. And the upcoming summer travel season is actually the key as to provide a longer period of international travel. I think TCOM continue to be in very good position. And the second one is e-commerce. We saw encouraging recovery in first quarter across all the company. Despite pretty subdued consumer demand, I think demand is still fairly elastic, to pricing. We see a pickup in demand in discretionary category. We see JD and Baba doing well, matching pricing to PDD. We see new trading policy that's going to come in later in the year that's potentially to drive demand. I think the theme for June promotion this year, very well set. Quality, affordable prices to drive further demand. I think lastly is more cloud computing. We also see a nice recovery there. We're seeing Baidu heading back to double-digit growth, Baba as mid-single digit, and we're also seeing Tencent actually return to positive growth. And Gen AI as a percentage of revenue, notice for the entire group that mid-single digits, that's almost comparable to their US peers. So we continue to see investment in large language model. I think the key question to focus on there, as they make commitments to these investments, with the private sector actually coming in and start spending on Gen AI.
Gen AI, large language models, so we're watching this week as a price war is unfolding. First, we heard from the likes of Alibaba and Baidu, and then Tencent now joins the bandwagon. Is this going to be something like what we're seeing in the EV space?
Good question, Emily. That's yet to be seen. Yeah, because right now, I think the reason that we're seeing pricing discount right now, because if you look at private enterprises in general, the business sentiment isn't very positive at this point in time, right? Similar to a consumer strategy on the e-commerce side, I think the strategy for price point for these companies is using price discount to drive elasticity in demand. We'll see how that goes, right? Assuming they can be successful in terms of driving demand and gaining adoption, I think there's an opportunity for them to potentially raise prices down the road. So we'll see how that goes. I think the pure price point strategy here is really reflecting probably the pretty low demand coming from the enterprise segment in China.